Jay Young, we got on today, and you are the CEO of King Operating and author of The Upside of Oil and Gas Investing. So I really appreciate you taking the time to come on. I'm interested to hear what you have to share with the listeners today.
Yeah, well, I appreciate that. Thanks for having me on. I mean, our background, or my background, 4 generations. I grew up in the oil patch. It's like my family reunions were basically, 4 generations, cousins, uncles, everybody was in the oil business. And so that's kind of what we all talked about. It's like, well, we talked about oil and gas, and my grandfather would drive out to the oil wells. And when I was tall enough to drive a pickup, he would have me go out there because he wanted me to drive, and I'd love to drive a pickup, when you're 12, 13 years old, and the old 3-speed on the column, and I would drive out there, and man, he'd let me drive, and I'd drive up and down those blacktop roads, and we'd check wells. He had about 30 wells he'd check every day, so we'd go from one well to the next well to the next well, and the majority of the time he'd get out and he would drop one of those things down in the tank to where he'd go all the way down, and he'd measure to see exactly, where the stick was today on the oil on the storage tank battery, and he would say, okay, this is this is how much oil we have today. So it would measure every day in the tank. So if it was like 10 feet one day, and then the next day it's at 11 feet, so it went down 9 feet until the top is 11 feet, then 12 feet. If it made a foot of oil a day in that tank, that was like I believe that 1.67 barrels of oil per inch is how much oil would accumulate in that tank that day. So we would go through and we'd go through and check all the tanks and see how much oil they produced every day. This is back in the 70s. Yeah, probably the 70s and the 80s is when I did this. He grew up in the oil field. He was a lifer in the business. My dad got out at some point during his career, but my grandfather and my great grandfather were lifers. I mean, they literally the whole time their careers they were in the oil business. You know, so he could sit and listen to a well and see how that well was producing. It's like and he listen to it. Because you have an oil rig or pumping unit, and then below the pumping unit you'd have rods, and you'd have inside tubing, which is inside casing, and he would listen to see how it was performing and how it sounded, and if there was if the rod's rubbing up against the casing, or if it's running dry or something, they could do that. So they would turn them off intermittently to see, how much oil they would produce per day, because you wanted to, you know, you needed to save money on expenses. And how you did that was by shutting these units off, but you didn't want to produce less oil, so you could, play with them a little bit and try to figure out exactly, when do you turn them on and when do you turn them off. Great times there, you know, learned a lot about the oil business, but nothing about, he drilled wells, before my time in the East Texas oil patch with H.L. Hunt. He worked for H.L. Hunt in there drilling wells, and so my dad remembers jumping from one drilling rig to the next, or in the town of Kilgore, you could literally jump from one rig to the next. They were so close together in the city town of Kilgore, Texas, back in that was probably the 50s, 60s, something like that. And then when I got out of school, when I went to school, and I graduated in high school in 81, and then college in 85. But when I was going to college, early 80s, man, the oil business was, man, it was terrible. It was like, man, nobody really wants to go in the oil business because the prices were down, and it was like turmoil,
Right.
all this. So I decided, okay, well, I will get a marketing degree. So I got a marketing degree. My other grandfather was a businessman, entrepreneur type. So I kind of went between both of my grandfathers. played a huge part in my life as mentors. And I spent a lot of time with my mom's dad, which is an entrepreneur, and my dad's dad was in the oil business. But I thought, okay, I'll get a marketing degree. So I did. And I graduated out in West Texas in 85. And then after that, I came back to Dallas, kind of worked in the stock market business because oil and gas really wasn't that popular. And then after the crash of 87, Black Monday, 87, and a bunch of other events, I just thought, man, I'm going to do something else. And so I decided, okay, do I go in the oil business or real estate? People make money in those industries, and I need to be there. I can't make money in the stock business. So I thought, okay, I'm going to go into the oil business. And so I did. And in 1990, I went with another company here in town, 5-year company in 95. So, for the longest time, all we did was just put together a project. We'd say, okay, hey, let's put together an oil and gas project, and here it is. And Mr. Jones, if you have 50 grand, 100,000, whatever, come on in and let's go drill a well together. Sounded good? Okay, sure, fine, no problem. So then we did that for a number of years, and our clients would make some money, they wouldn't make money. It's kind of like back and forth, back and forth, back and forth. And so in 2015, a few years later, 2 decades later, I guess, I'm on a chairlift with a guy. It's on the back of my book. Here's my book. I book The Upside of Oil and Gas Investing. And on the back cover of my book, it talks about me and David Moore. David Moore's an apartment guy. And this apartment guy, I'm just talking to him. He's a good friend. We're on a chairlift. Our girls are on each side of us. And I'm talking to David, and I said, man, how's business? And he said, unbelievable. And I'm in the oil business. This is 2015. I'm dying, right? I can't find a client. We're trying to drill wells. We're trying to do anything we can, to put together a good prospect or clients. And he said, man, we're doing great. And I thought at that time, man, why didn't I go in the real estate business? No, I was just kidding. But I thought, okay, hey, what are you doing? Or how do you structure your deals? I mean, that's been the $1 million question about deals, and how do you structure your deals? And so I thought, okay, I asked a question, and he said, well, we do value add. I said, man, what is value add? And he said, well, value add is basically when you find an apartment complex like we do. We go by and we find a, apartment complex that's run down, but it has a great address. You can't change the address, but you can change the apartment complex. Don't buy the best apartment complex on the worst street. Buy the worst apartment complex on the best street. Location,
Right.
location, location. I said, okay. And he said, we'll value add. He said, we'll raise enough money to buy it from investors. And then he said, we'll put some more money in there because it's going to need work. Whatever it's going to need work somehow. So I'm like, okay, so what do you mean? He said, well, we'll put 30% down. And he said, we're going, because what we want to do is we want to either sell it or we want to increase the rents in the future so we can refinance our debt because we have a high interest rate debt. We want to get some lower interest rate debt. And how we do that is by increasing the rents, get up to 95%. And then we can go to the bank and go, hey, we're 95%. And they go, oh man, that's great. We'll give you X amount of leverage. And then, a lot of his clients would cash out of their equity. And I'm listening to this going, this is a brand new world to me, because the oil business is different, man. You go out and find a prospect. It's like, I could find a prospect around here somewhere, and just say, hey, let's grab some guys together and let's go do this. But instead, he's doing something. And I said, well, how do you make money? And he said, well, I make money, a little bit of money on the front. I manage the property. And then he said, but after my clients get a return, he said, I get a back end. That's how he makes money. And I'm like, now that's pretty cool. Let me think about that in the oil and gas business. And so I came back after my holiday with David and a lot of the other families from our daughter's school. And it's all about timing and asking the right questions, which is what I preach a lot to my kids, but also other kids as well. It's about timing. It's about showing up, and it's about asking the right questions. Um, so I get back and I'm like, I've got a Rice MBA. I've got a SMU grad, and I'm like, all right, guys, this is what we're going to do. Change our whole model, you know, and we're going to go value add this thing. So we drilled 2 wells. Actually, I raised the money to go drill 1 well, and I thought I was going to raise the money to drill a second well. And all of a sudden, man, these wells came in at big time. And I thought, okay, good. Here we go. Here we go. We're going to do the apartment deal. And I sold a third of the asset, and I gave clients back like 131% of their money back in a year.
Dang.
Like, okay, now I got this thing. So now I'm like the same thing I'm doing now is like, okay, we're going to value add assets. We're going to get some management so we can make sure that we're constantly on target for this, but we're going to increase the value of these projects so we can value add or put meat on the bone for a buyer to come in and go, man, I love that project. And what do I need to do to buy it? How much money do you want? So today we've changed our deal, and it's like the fund that I'm raising now. We have 2 different projects, actually 3 different projects in a fund. We have our third fund we're working on, but uh, it's kind of like area up in the Panhandle. You know what our goal is to drill 20 wells and sell, and I want to have enough acreage for what they call a J unit. That's called JAY unit, and that is my name, Jay, because I came up with this idea from several people, but I wanted to have 1 well that she drilled and then 2 offset wells. So what I want to do is I want to come in and raise enough equity and then bring on some debt, and then we can go in here and drill 20 wells as quick as possible and then sell it, because there's going to be a public company out there that wants to buy producing property. If we drill 20 horizontal wells, it's going to cost 120 million, 120, 130 million, but we're going to raise half the money up front, and then we'll get financing on the last half of the money to drill the remaining wells. We'll spend 120, 130 million bucks drilling these wells, and our goal is to sell these for double what they cost, and we hope to sell them for $300 million in the future. So kind of through my whole career of it, I'm 62 right now, and if this comes on after January 3rd, then it'll be my birthday, and I'll be 63. But my long career, what I've noticed is you've got to make money for your clients, and if you can take care of those clients, and if you not only everybody wants to, there's not a promoter out there, not an oil and gas company out there that doesn't want to make money for their clients. But if you really know how to, if you really know how to take care of those clients, everything else is taken care of. Okay. But I never went into a deal that was, 10 years ago or 20 years ago that, you know, yeah, could it produce enough money to pay my clients back a great return? Yeah. What are the odds? Well, not very good, but we're going to sell deals and we're going to make money. Well, that's bullshit. I mean, you got to put together projects to where, you know, it's a, I don't say it's a guarantee your clients are going to make money, but you know what? I guarantee you that if I can go out there and drill, put up the equity to go drill enough wells up in the Panhandle, and I can put together these J units, which is it's a one one location that I've drilled horizontal that I've drilled for $6 million, and I offset that, and I leave 2 locations there that I don't drill called PUDs. Then that unit's going to be worth 15 million bucks. I put 20 of those together, that's worth 300 million. So I guess over the story, I guess the story of my career and what I've learned and what I'm talking about now is the majority of the thing is, hey, you know what, man, I want clients to make money, but I need to be smart enough or smart to be able to do that. How can you be smart enough to figure out exactly how can you make your clients money? I don't know. I mean, is that kind of what you're wanting to kind of wanting?
Yeah, no, I think that gives people a good understanding of what your background is and what your business is all about, and then what your book is about. How much of the areas that you're like, how where's the value at? Is it like the geology that you're running into, or is it how you like drill and complete your wells and how you operate them, or is it kind of all that together that's driving the value and the upside?
Yeah, it's a great question. And basically, we look at a lot of deals, and you don't just buy the first one. You know, don't turn it away because it may be the one that you want, but look at many different deals. And it's like the Bivens Ranch. It's a 60,000 acre ranch, and we have the rights to drill in the 60,000 acre ranch. And when we looked at it, you know, there were some wells drilled out there, and I'm like, man, is this worth it or not? What's it going to cost? Fortunately, it didn't cost us anything to buy the ranch or buy the rights to drill in the ranch. If you're drilling that in the Permian Basin, I mean, you're going to spend, ten, $20,000 an acre. We didn't spend any money on acreage, but we had to drill. We had a drilling commitment. We need to drill 2 wells a year, 2 horizontal wells a year. Which is 20, 25, 30 million. But looked at it and said, okay, we have some geologists, and it matters what kind of geologist do you have? Do you have an exploration geologist, or what kind of questions do you ask the geologist? You know, and that's like with our guy up here, Mark Ayers. Paul Jerome was our geologist, and he was more of an exploration geologist, and he loved drilling wells, and he wanted to find it big, and he wanted to go home and say, hey man, guess what I did, honey? I found a huge field out here, and blah 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 blah. Well, that's not going to make your clients any money, because it's a 10% shot. You're going to make money. 90% is going to be a dry hole, or it's just not going to make enough money to be scalable. So when we looked at the Bivens Ranch, first we had our geologist look at it and say, okay, what does geology say? What do the offset wells do? What does it look like when we drill a well? What did they do? Did they do something? Are we going to do something that they didn't do? The answer was yes. They drilled wells. They were out of zone a lot. Apache was, because they didn't have seismic. So now we incorporate seismic. We go straight down, and we're going to drill horizontally right in the thick of things. And at that point, yes, that's going to be good for us, because we can stay in zone, and we can use different frac technology that people didn't have. So the geologist looks at it first and says, okay, good. Here, geology looks good. Our engineers look at it and say, okay. And our geologist may say, yeah, we've got 100 locations that we can drill, and they may produce anywhere from 600,000 barrels to a million. And so our engineer will look at it, and he's the Eeyore of the group, because he wants to say, well, I don't know, dude. I don't think there is any oil out there. I don't think there is, but we'll check to see. Well, and so you go and you say, okay, now I think there's only 400,000 barrels, and I think that oil's going to $40 a barrel. Okay, well then he puts it in his little, spits it out, and if that's the kind of reserve, if that's the kind of internal rate of return that you want, then that's great. But your break-even numbers are different. So anyway, the geologist looks at it, then the engineer will look at it, put the numbers together, and they'll do the worst case scenario. Your geologist, normally you're optimistic. Oh, hey, look at this! I got this deal. We're gonna make plenty of money. And the engineer's like, yeah, but it's just I don't know, man. It doesn't look like it's gonna be any oil. They're just the negative person. It's kind of like the husband wife of a lot of different deals. But anyway, then the landman or geophysicist, if you have seismic, you look at the seismic, which we did, went through that all very, very well. And then after that, then we said, okay, now the landman will look at it and make sure that everything's good with the land, that we have the rights to drill on it, or to pick up leases, like Tommy Norris's son did out there on the show Landman. They pick up the leases, and then you have all the leases to drill. Because if you don't have leases, you can't drill. You got to have places to drill for oil. So that's what the landman does. So everybody has to check off on it, and then you see, from my standpoint, financially, that okay, hey, we can handle drilling two horizontal wells out here a year. We go to two this year, two last year, two this year, and then we go to like four next year. Man, we got to step up. Instead of spending 25 million a year, we got to spend 50 million a year. Are we going to be able to find, that kind of money? Which the answer is hopefully.
Is that an issue trying to have the capital and then deploy it effectively? I could see where you kind of get bottlenecked onto, one side, you need capital to do work, but then you also potentially can have too much capital that you can't get rigs and tubing and hands and all that.
Yeah, I mean, it's hard to find equity, upfront equity, and it's so when we're looking at a project, we want to make sure that we feel very, very comfortable at it because we've done it the other way where we didn't have line of sight or we didn't have a good plan for our clients on good return or it was too exploration. There was another project that I really liked. It was very scalable. We had a lot of acreage and it's right where we've drilled a lot of wells. And actually, King Operating's had a discovery out there where there's been billions of dollars spent on wells after we found this one discovery out in West Texas. There's some offset acres there that we picked up for, not very much money. I loved the project. And then I asked Mark, I said, Mark, what's the odds? What's the odds of you getting, at least 300,000 barrels? And he said, Jay, I don't know. Not really that good. 50-50. And I go, dude, throw that deal in the trash. I don't want it. You know, I don't want sure things, but I can do better with sure things than I can with deals that have that expiration because, you know, it doesn't, you got to sell the sizzle. It doesn't have the sizzle, but dude, when you give your clients back, you know, big revenue checks every month, man, that is awesome. And they love revenue checks and you don't have to give them huge revenue checks. You don't have to give them big ones. You give them 10, 20% a year, and you show them how that's going to grow over time, and you're going to give them monthly income, tax benefits, and you're going to give them a multiple over time. Man, that's what you do. And if you put together, that's like the Bibbins is one project, putting 20 J units there. We're going to drill 20 wells and then sell it. That's it. I don't. 20 wells is a big number and I want to have something that I'm very proud of, and I want something that we can do soon. And so the Bivens Ranch or this Midcon area that I'm talking about right now, we can do that in a short amount of time. Then that's when people equity just comes and goes, hey man, I love you. You're who you say you are, and nobody does what we're doing where you grow the assets and sell them. We're taking it back in. We get some front end money management, but we also get a back end, and we're trying to sell a big oil and gas deal. Nobody else does this. I mean, nobody else is. I mean, unless you go the institutional route, but we're the only ones at the retail level where we're going out to talk to each. We're going out to talk to individual investors. 200,000. We got a bunch of $1 million checks. That kind of equity is what we're looking for, and that's what we need to get the return for the client. I can't raise 20 million a year and get a good return for clients. You know, I got to raise a lot more money than that.
Yeah. And all your investors have to be all qualified investors, I imagine.
Yeah, they're accredited investors.
Yeah, or
Yeah,
right. Just
yeah,
so if somebody's listening to this and they're wondering how if you're taking on more investors, that would be something you would have to a hurdle you would have to overcome or have the capital available.
yeah, yeah. I mean, that's true. And we look at monthly income checks. We're sending out revenue checks on deals we have right now, but we're also looking at multiple in three 3 to 5 years. I'm hoping 2 to 3 years, but let's just say, get your money back in a year, 2 years when we sell that first deal. And then after that, we'll continue scaling assets and growing assets inside the fund.
You talked about having the right timing. Is this something that you're kind of perceiving now in the kind of where things are? This is good timing, or would you potentially hold it until, get everything wrapped up and then sell at a later date, maybe have a higher holding period?
Yeah, it's a good question. I'll tell you what, I kind of take it off of David. David says, buying, I'm buying deals, I'm buying 10 deals a year. I'm selling 10, 20 deals a year. And he said, I never know. That's the one thing we can't control is when. Now, let's just say that we look to scale this investment and sell it for 300 million in 2 years, but we're not going to get 300 million. We have to make the decision. Do we want to sell it for 200 million just to sell it? Or do we want to continue increasing the value and then add on to another project or increase the value by drilling more wells? Or I think you do that. But in my opinion, everything's for sale every year.
Right.
It's like we put it out there, and if we get somebody that says, hey, you know what, we got 300 million bucks, nobody offers us 200 million bucks, 220, but then all of a sudden somebody goes, hey, I got 300 million, done, you're in. It's like you never know when somebody's gonna come along and want it worse than you do, and want to pay you for it. So, in my opinion, when we get to this level, right now we're going to there's three assets, and every year, beginning next year, we'll have these assets up for sale, so we can say, hey, you know what? It's for sale. If you want it, fine. If you don't, fine. But it's available. Just because, like I said, you never know.
If someone's looking at investing, and what's the difference for somebody if they're looking at like an energy stock versus investing in what you're doing in a project? What would kind of be the mindset for each investing area?
Yeah. Well, risk to reward. And I say that, but I own a lot of a company called Ring Energy out of the Woodlands, and I love that stock. They're producing 20,000 barrels a day. They got a lot of debt, but the stock keeps going down, and I wish it wouldn't. But I've known that company for a long time, and I knew the ex CEO real well, and some of the guys that work there, and I still do. I still keep up with them. But you're buying a stock, so it's kind of like you can always buy and sell. You know, if you buy it at 10 and it goes to 9, and you get it worries you to sell it, take a dollar loss and move on down the road. With an oil and gas project, you're putting up 100,000, 200,000, or whatever. Now you get 100% write off. So like on January 1st, ring ring ring, the celebration on on New Year's Day, in my opinion, is I just saved myself a tremendous amount of money in taxes because I invested in oil and gas. So that's kind of my saying, because some people don't. Some people don't. But you're at our discretion, if you will, on an oil and gas investment, because you're giving us 100,000 or $200,000. You're getting a K1, in February or March. You're writing it off your taxes. Hey, great, you save 30, 40% on your taxes. So if you wrote checks for 100,000, I mean the government's giving you back 30 to $40,000, on that first year. So that's great. You're saving money on your taxes. And I'm going to send you monthly revenue checks. And I want to scale the investment. But if prices go down and we can't find the capital, it may be a longer term investment than you want. Best case scenario, I say three to one in 3 years. Or what's the downside? Get your money back in 3 years. You get your tax write-offs. Get your money back, cash on cash, in 2 to 3 years, and then you just get monthly revenue checks because we can't find a buyer, or something happens to where that's not our goal. Our goal is to find a buyer for everything we have, but there is downside. Where it's illiquid, and you can't just all of a sudden just go off and go, hey, yeah, hey, Jay, can I get my money back? No, your money was spent. Your money was spent drilling wells. It's in the ground, and I can't just go get it and sell it. So
Or when people invest, is their money kind of locked into that time frame you're talking about, like the 2 year, 3 year time frame,
yeah,
or can they pull it out like under
no,
penalty or something like that?
no, it's illiquid.
Yeah.
It is something that you have to, just say, hey, I mean, we do it every year. My wife and I do, and it's something we just say, okay, here it is, and you put the money in, and you know that it's in there, and it's, you know, I don't need the money. I'm not doing it because I may need it in 3 months or a year, or 2 years, or 3 years. I do it because, hey, I know that I'm going to get my tax write off. I know that I'm going to get monthly income, and I'm looking to get a scalable return checks in the next 3 to 5 years. So I understand that going in. Some people, and you shouldn't invest unless you understand that. You shouldn't go in with an idea that, man, what if I need some money in the next 3 months or 6 months? Why do I want to do this? Well, you don't. You don't want to invest in oil and gas.
Yeah, so that's probably who it's not for, is maybe somebody that doesn't wants to be liquid. If you want to be liquid, this probably isn't for you. And then if you don't understand the investment well enough, it's probably not for you.
Right. Right. Exactly.
Yeah, so it sounds, you asked earlier, like, how do you um, become an expert in this? I just imagine, I was looking at your website earlier. It looks like you have a pretty capable team under you. How does your team kind of affect everything you got going on?
That's another good question. And our guys, three of them, a geologist and a landman and an engineer, all three have worked for H.L. Hunt, or Ray Hunt, I should say. H.L. Hunt's youngest son is Ray Hunt, and Ray is one of the most successful financially of all the Hunts. And they did a deal in the Bakken and sold out and made a bunch of money, and they went home to retire. And then all of a sudden they're like, I want to retire, and then they don't, and then start come back to work. So they came to work up here. So three of our people are ex Hunt Oil employees, and they're now our employees. But they're so important. One of the guys has worked for Geo Southern, another company here in town or in Texas, that sold out for several $billion. Kelly Duncan, who drills our wells. I say, hey, everything past this part up here, this stake here, when you walk in that gate, when the gate guard says, okay, you can go, Kelly takes care of everything at that point, and he is the guy on location. He may not be on location, but he's got guys on location to drill and complete and produce those wells, and so that's what he does. So you got a group of geologists at our company. One's the Hunt guy I was telling you, Mark Ayers. We also have Phil Moore. We have another couple of consultants that we talk to constantly about projects. Engineers, we have Kelly Duncan, Ryan Gores, and Steve Mulligan. Steve's also our chief operating officer. And then landman, we have Bill Phillips, was one of the Hunt people that I've known for 15 years, 20 years or so, I guess. And he was with them. And then Aaron's also, Ledger is another one of our landmen that we have. So it is so important to have good people, and they're employees of ours, and they work and they breathe King operating, part of the King family, King operating, and we incentivize them with our back end that we get. We incentivize them so they're financially incentivized as well. And that's what I wanted to make sure of when we put these projects together, like that Bivens Ranch. They want to get to 20 wells and sell because, hey, they get a check, and they're incentivized. The Bivens Ranch or the Mid Continent or the non-op fund that we have, all those are incentivized by them. So when we when we make money financially, it's not just me or the company that's making money. It's all of us. All of us have a hand in the profits, if you will, of the company.
We talked about um, drilling these wells and putting this project together. Is there any portion of, like, are you operating all these, or are these kind of non-op, or is there a portion of your portfolio that you guys do operate?
Yeah, we operate two of our projects. I've got a third project, or a third fund, if you will. And the big one, the first one is our Bivens project. We're under the gun there to drill, $25 million worth of wells this year. So that's where the first part of money goes. And the second part goes to the uh, non-op piece, or I'm sorry. The piece that we have up in the Panhandle, which is that 6 county area, and that's operated by us. And then the third fund we have which will raise 50 to $60 million this year or next year for it. That's a not-op fund. And we've done deals with ConocoPhillips, Car Resources, Dominion, other big oil and gas companies that we look at deals and we like their deals, and so we'll participate with them on wells. So, and it spits off plenty of cash because it's just AFEs basically. It's mostly just AFEs, authority for expenditure on a well, and they say, hey, we need a 10% partner on a $10 million well, and it's $1 million, and so we participate with them project.
And I imagine these are all people and in potentially areas that you've already done deals before with them.
Yeah, we're very aware of any project that we look at, and I've done that before. I've done it where I don't. I've done it where we take a lot of risk. I don't want to take a lot of risk. We can make money. We can make a lot of money not taking risk. And our clients can make a lot of money by the way we structure our deals by not taking a lot of risk. I just don't want to take. I don't want to take the risk because the other side of that is okay. Well, the other side of that is okay. Well, our clients, they haul ass, and we're like, wait. And they're like, well, hey, we want to make money. We don't want to take risk. And we're like, I understand. So we're going into areas right now that we know there's oil and gas there.
What are some red flags or things that kind of might turn you off to a deal stuff that you've kind of learned over your career?
Yeah. What are some mistakes? Well, the big one is how you structure your deal. Over promoting them. I've heard a lot of people that will over promote deals to where there's no way the client's gonna make any money. Period. End of story. They're not gonna make any money. You could hit, the spindle top, and they're just not gonna make any money because you structure your deal wrong for them. Not good. That's not good. I mean, I had a guy that he finally went to jail, but I showed him a deal, and he's like, "Oh man, we could promote this thing up way." I'm like, dude, and I wrote about this in my book too. I didn't tell you who he was or anything, but I mean, he's like, man, we could promote that up so high that you could sell one unit and you can live all year. It's like there's no way that the client's going to make any money. So I think the biggest thing is take care of your clients. You take care of your clients, and I mean that by structuring the project where they can make money, and also not over promote them. You don't need to kill it. You don't need to make $1 million a year. 25 years old, or when I started, take care of those clients, and man, they'll definitely take care of you in the future.
Are there rules around like over promoting or no? I think some of us think of the all the Enron stuff, how stuff got overvalued. Is there any rules around over promoting and how you kind of pay out investors and that type of thing, or is it kind of somewhat all at your own risk?
Yeah, it's pretty much your own risk. I mean, and I say that there should be, and they should go to jail if you over promote your project. But there's not a lot of people that. I mean, there's so many oil and gas companies out there up and down the street. I mean, out here on the tollway, there's no telling how many companies there are out there right now that are just, you know, promoting deals out and getting by with it, and either sending money to clients or not sending money to clients. Or what happens is, I think over the years, is if the clients complain to the state securities board or the SEC or NASD or some other, if they complain, then the government has they probably need to come go look at it. So they'll come into your company and talk to you, and you know all this kind of stuff. But unfortunately, it's pretty much the Wild West, where as long as you're telling people, and risk, the oil and gas game is risky and all that stuff. And people just go, well, I lost my money, and those guys are a bunch of crooks, but you're too embarrassed to go tell anybody about it. So you just go, all right, I don't want to tell my wife I lost 50 grand, or I don't want to go out and tell anybody else. So they just be quiet about it. It's unfortunate. I know there's been a tremendous amount of fortunes lost, literally lost, because they lose their money and don't do anything about it. So
Yeah.
it's unfortunate.
And I imagine, like, if you already, again, you're operating kind of somewhere similar, you already have cash flows and information and pricing index that you can share with them. So, like, you already know the project and all the kind of information and variables about it that makes it more transparent. Like you said, you're not going into an exploration type scenario. You're going into maybe something, let's call it more conventional. So something that might be easier understood to an investor.
Right. Well, it's like the project we have up in the Panhandle, and I can show you, but it's like you show people project up there, and there's already been literally thousands of wells drilled up in that area. So it to all different depths to try different either vertical wells, horizontal wells. It's a geologist's dream, really. I mean, the worst geologist to do is go send them out to some pasture and go, there hasn't been a well drilled for 20 miles. All right, now find me a prospect out here. That's hard. But when you have surrounding production or you have wells that have already been drilled, like I say, either vertically or horizontally, and you tell somebody, I mean, I direct my team all the time. Hey, how many units have you found? How many J units? A J unit is enough acreage to drill one PDP well in two offsetting locations, two PUDs. That's a J unit. You want to put 20 of those together and then sell. So I'd task my team. I got a meeting in the morning at 10 o'clock, and they know that question's coming, man. Hey, how many J units do you have so far? And what does it look like? How many, when are we going to have our 20? And how much is it going to cost to get these 20 units together? Because I want to drill these and I want to sell because that's what's going to make the clients money. And like I said, it's all different. There's literally, I forget how many wells have been drilled in that 6 county area, like 3,000, 6,000, 30,000. Like 30,000 wells have been drilled in the 6 county area. I mean, there's tons. And there's so much information that you can look at because, and not that you can get your hands on all the information, but you can find out, okay, well, this well was drilled. It was drilled to a depth of, 6,000 feet. They feel like the oil's coming out of the Marmaton Formation, and they produced it for, you know, it was drilled in 19 whatever 83, and it's produced. So you can get that information and put together a prospect and find these places in here to where you can put. Okay, hey, here's 640 acres. We're looking for 640 acres here, 640 here, 640 here, and in between all these other wells. I mean, I told you earlier, Travis, about my discovery that we had up in Scurry County, West Texas, the eastern shelf of the Permian, and all it was there was a lot of vertical wells that were drilled out here in this field. A lot of vertical wells that were drilled. Vertical wells just drilled, you know, from the beginning all the way to the bottom. It didn't go horizontal; it just went vertical. And there was like 25 wells that were drilled in this area of about 7 to 8,000 acres. There was all these different vertical wells that were drilled, and those wells had produced 1 million barrels of oil. So it's about 40,000 barrels of oil each on vertical wells that were drilled. And
Hmm.
then there was also like 2 BCF per overall. And so our geologist looked at this and said, "Hey, I got an idea." And now this back when we're taking risks, right? It's not you wouldn't do that today, but maybe I don't know, but I still love the game. But you look at it and you go, "All right." He said, "I feel like that if we drill right in between these other wells that have already produced vertically. Now, there's vertical wells. It's like a vertical well, and you're drilling horizontally. Right in between them, is there going to be any oil left?" And so you go with the concept of a vertical well that was drilled only produces right around that wellbore, not far around that wellbore. And so
Sure.
on the outskirts of that, the oil's still there. And so we drilled a well up there. This is 2016. Raised the money in 2015 after I got back from the ski trip. In 2015, we're drilling the well. It's cold. I mean, it's colder than whatever one night, and 3 o'clock in the morning, and I talked to Bob, our engineer, and I said, dude, this is becoming really too expensive, and on drilling this well. And he said, yeah, but he said, Jay, you only give me one time, give me one chance to frack it. And he said, this is it. And so I drove home that night. It's a couple hours from my house. And I said, man, this is ridiculous. And that well came in producing an incredible amount of oil. And it was a discovery that we had. And we had enough acreage out there to drill more wells. And then there was people that started looking around going, oh, hey, what's King Operating doing over there? Yeah, let's get some more acreage and let's drill the Strawn zone horizontally. And they started making some money, which is, I'm glad for them. So everybody did very well there, but there's just different ideas, and it's a great business on looking at, different ideas on how can you make money in the oil patch, and how can us, like I said, when I say us, we're raising a $75 million fund, let's say, to drill wells in the mid-continent and hopefully sell it for 300 million, in the next 3 years. We're gonna use 75 million. We'll use 60 million or so to and we'll spend about 140 to 150 million dollars drilling wells, and hopefully we'll using leverage, healthy leverage, that'll make our clients a good multiple on their investment.
That concept of drilling right in between all those wells, because that is something that everyone thinks about is what kind of an area, what kind of shape are you pulling from, and where's all that oil coming from? How much oil is still in place that you can get your hands on? Well, why don't what's your book about? Kind of give it lay of the land on that, and then where can people reach out with you, your website or phone number and all that?
All right, great, thanks, appreciate that. So I wrote the book, and I put it hardbound, and I got Forbes down here because I'm like, man, I want this thing to be worth it. I want people to go, man, this guy wants to tell a story because he'll put his money where his mouth is. Because when people spend the kind of money to write a book and to put that money out there, I mean, it's not cheap, So I wrote the book because I wanted people to know how the new model works and why it puts the traditional model to shame. That's right here on the book. Any of your readers, if they're interested and they're qualified, and they write me, I'll send them an autographed copy of my book. I'll autograph it right there for you, and I'll send it to you. Autographed copy of the book, just because you know Travis. That's it. Just because you know him, I'll
Appreciate that.
autograph a book for you. I autographed 4 of them today for some people. I was on a radio show in Pennsylvania today. No, Detroit. I did Detroit, and also did a TV. But anyway, I wrote it because I wanted people to know that there's a different way to invest in oil and gas. There's a different way. There's a better way to invest in oil and gas. And because people don't know the difference, you call somebody on the phone and say, yes, hey, I want to go and I want to talk to you about investing in oil and gas. And you're like, yeah, I watched that Landman and I'm interested. Can I buy me a, gold nugget, pin with a oil rig on it and put it right here? Like I'm an old man or something. And yes, you sure can. Send me 100 grand. And then they lose all their money. They don't have any chance of making any money because these promoters out here, and they may have they may have some of the best intentions of all time, but I'm going to tell you, they just don't know what they're doing. And you tell me exactly what you're going to do on your project to make your clients money. And I'll tell the client whether or not I think it's going to work or not. And I'll take my opinion. You can send that to, 3 of my smartest people that started huge private equity companies, like NGP, Insearch, what's the other one? InCap. I mean, these other ones that use institutional money. So we're doing the same thing that these companies do with institutional money. We're doing the same thing for them. So that's what we do, and that's how we put our project together. And I wanted to tell people about it. And there's no better way to do it than to be on the Crude Cast with Travis and write a book. and I'll get my name out there so people will go, huh, oh, I'm interested and I want to do it. So go to our website, kingoperating.com, or look up J.R. Young. My name's right there, jryoung.com, the J Young Show, or the whatever, kingoperating.com, and just say, hey, I heard you on the Crudecast and I want an autographed copy of your book, and I'll send it to you.
Perfect.
Okay.
Hey, I appreciate you coming on today, Jay. You hope you get a lot of callbacks and interest in your project. Yeah, I'd love to have you back on when everything's, wrapping up here in a couple of years and see where you're at. And yeah, get some follow up from you. Sounds really interesting. And I
That'd be
wish you
great.
all
Hey, I love to have an
success.
update every 6 months or every year or something. Have me back on. I'll let you know how these projects are turning out, and maybe one of these days we'll snag one of these listeners that you have, and they can get down here to Texas, and we'll show them a good time in an oil rig or two. Okay.
Sounds great. Thanks,
All
sir.
right, man. Thank you. Appreciate it.